All right, let's dive in. We're about to unpack a shift in finance that's so big, its potential is measured in trillions. We're talking about the new frontier, digital assets. So let's just start with this number, $5 trillion. That's the value that analysts over at Bernstein are predicting for the tokenization market. And get this, not in some distant future, but in just the next 5 years. This is not science fiction, folks. This is the next evolution of finance, and it is happening right now. So that begs the question, right? What exactly is tokenization? And why is everyone saying it's going to completely rewire how we own and trade? Well, pretty much everything. That is exactly what we're here to break down. Here's how we'll do it. First, we'll talk about the sheer scale of this opportunity. Then, I'm going to explain what tokenization is in plain English. After that, we'll get into its key benefits, the markets it's already shaking up, and we'll wrap it all up with a strategic checklist for any investor looking at the space. Okay, first things first, let's really try to wrap our heads around the scale we're dealing with here. We're not talking about some niche trend. This is a foundational, seismic shift in the world of finance. And again, this isn't just some hypothetical number pulled out of thin air. This is a hard forecast from a major institution, Bernstein. They're essentially betting that this tech is going to unlock trillions of dollars in value by making markets faster, cheaper, and frankly, open to way more people. That is the headline that has Wall Street's complete attention. So we've got the why, this massive $5 trillion opportunity. But what about the how? What on earth is tokenization? I promise you, it's a lot simpler than it sounds. At its absolute core, tokenization is pretty straightforward. You take a real-world asset, think a skyscraper, a priceless piece of art, a stake in a private company, and you create a kind of digital deed for it. This digital deed, which we call a token, then lives securely on a blockchain. Now this is where it clicks. Let's take a skyscraper. Traditionally, it's got one owner, one big paper deed. It's totally illiquid. Selling it takes months, and you can't just, sell off the 10th floor bathroom. Well, tokenization just shatters that old model. It can divide the ownership into, say, 1 million digital shares, and suddenly anyone can buy, sell, or trade a tiny piece of that skyscraper, instantly, 24/7, from literally anywhere in the world. So you might be asking, why go through all this trouble? Well, it's because tokenization solves some of the oldest, most stubborn problems in finance. Let's look at the core benefits. Bernstein's entire $5 trillion forecast really rests on these 3 pillars. Number 1, efficiency, just making the back office of finance faster and cheaper. Number 2, liquidity, turning things that are hard to sell, like our skyscraper, into something you can trade as easily as a stock. And number 3, access, opening up brand new investment opportunities for a much wider audience. This slide really shows the before and after of that efficiency point. I mean, today's financial system runs on some pretty old plumbing. A simple stock trade can take 2 whole days to fully settle, and it passes through a bunch of middlemen, each taking a cut. Blockchain just replaces that winding country road with a direct superhighway. It allows for peer-to-peer settlement in minutes, not days, slashing costs and getting rid of delays. It is a massive, massive upgrade to the entire system. Okay, so if this is the new financial plumbing, where is it actually being installed first? Let's take a look at the specific markets that add up to that $5 trillion forecast. The opportunity isn't just one big thing. It's spread across several huge markets. But look at that biggest slice of the pie, currencies. Tokenized money is really the bedrock, the foundation of this entire new system. And it's followed closely by those hard-to-trade assets we've been talking about, like private funds and real estate. Now, this figure is absolutely staggering. Bernstein projects that 2% of the entire global money supply, we're talking about $3 trillion, is going to become tokenized. This will happen mostly in 2 ways, through stablecoins, which are basically digital dollars issued by private companies, and through central bank digital currencies, or CBDCs, which are digital currencies issued directly by governments. This tokenized cash is the fuel for this whole new economy. Yeah, think of these tokenized currencies as the native cash of this new digital world. You want to buy a token for that skyscraper we talked about? Well, now you can pay for it instantly with a digital dollar. This creates a totally seamless ecosystem where deposits, payments, and investments all happen right there on the blockchain in real time. So, with the foundation laid, let's look to the future. How is this all expected to roll out, and what does it really mean for the future of wealth management? This chart says it all. Look at how fast this is expected to move. We are going from what is a tiny early stage market today to a $5 trillion behemoth in just 5 years. That is an explosive growth curve, and it's all based on this new financial infrastructure being built as we speak. And this timeline here kind of lays out the roadmap. Right now, we are deep in the infrastructure phase, building the core technology. Coming up next, in the next 1 to 2 years, we'll see regulatory clarity, the official rules of the road. And that clarity, that's the key that's going to unlock the floodgates for big institutional money to pour in over the next 3 to 5 years. So, if you're an investor, how in the world do you navigate this new frontier? Well, it's definitely not about jumping in blindly. It's about being strategic and asking the right questions. Here are 3 absolutely critical steps. First, you have to remember that a token is just a wrapper. A token for a bad asset is still a bad asset. The quality of what's underneath comes first, always. Second, the technology has to be solid. Is the blockchain actually secure? Can it handle the volume? And third, what are the legal protections? Is your ownership clearly defined and, actually enforceable? And of course, you have to be totally clear-eyed about the risks. The regulatory rulebook is still being written as we go. The technology, while it's powerful, is still new and has security vulnerabilities. And in these early days, low liquidity can mean wild price swings. So every serious investor needs to have these factors right on their dashboard. So we'll leave you with this final thought. With a projected $3 trillion of currency alone moving onto these new digital rails, the very nature of money itself is changing. This isn't just some game for big institutions. Eventually, it's going to impact everyone. So the question is no longer if this will reshape finance, but how you'll adapt your strategy to it.